You don't have to be a real estate expert to get a really accurate assessment of what's been happening in real estate in New Jersey and even the northeastern region of the country in general since the pandemic. What we're seeing right now are the first signs of pullback and correction in this market. Question becomes then, are we simply in a slowdown, a deceleration, a correction, a crash? Where are we falling on this continuum? We're going to let the data tell us the story in this particular episode. So let's go ahead and dive in now. Welcome to New Jersey Living. My name is Corey Jones. I'm a licensed real estate agent in New Jersey, and my job is to help hundreds of buyers and sellers just like yourself both buy and sell real estate, in some cases rent, here in the Garden State. So we're going to dive into some numbers as I always do, and those who really appreciate some of that analytic data, this is something that is going to be right up your alley. Those who already been with me for some time, you kind of know the routine. We're going to go through some numbers. We're also going to cover some factors that create demand in some of the markets that we're talking about. So we're looking at 4 different counties today because I'm focusing on what is happening in the market coming off of summer 2025. Right now, at time of recording, we're in September. The data that we're looking at is from July because August, those data points are still being tabulated and they're not really finalized until we get a little further into September. So we'll have some updates on that in due time. But right now, what we know is that July 2025 gives us really a strong sample of what the spring activity looked like. Most of those spring deals, I would say it's safe to say that most of the spring deals from April and May and even into early June, many of them are closing in July, some June as well, but July, we're seeing a good amount of that type of activity. As I mentioned in the beginning, from the time of COVID until now, we've seen year-to-year appreciation numbers that have averaged at one point, averaged at 18%, if you can imagine, for New Jersey. We have shrank back, settled down, closer to about 8%, but even with 8%, and that's an average for the statewide, how many salaries are going up 8% a year? There has to be something that calms this market down because there are too many people looking for homes and too many people are still finding it very challenging to get into a home with this type of market we're looking at with prices that are so high right now. And I'm careful not to use the word inflated. You can say inflated, but inflated suggests that there's a bubble that's going to burst. We're going to get into that as well. That's something that we're looking at for potential here in New Jersey. So let's go ahead and dive into some of the numbers and some of the markets, and we are going to start with Bergen County. All right, so starting with Bergen County, we're looking at 3 townships specifically. These are our higher demand locations, and when we talk high demand, they tend to focus on 3 dynamics that I point out in my location-specific episodes, that being proximity to New York City, being within an hour drive to Midtown Manhattan, having a local train station, and having also school ratings and somewhere in the A range based on niche.com. Those are those 3 that we tend to really lean into when we talk about high demand. And pretty much invariably, if you have a check mark in all those areas, you're going to be very much a high demand market. So for Bergen, we are going back to Ridgewood, common location for our particular, our channel, I would say in general, Paramus and Teaneck. So we're going to flash up some data points here and look at some of the indicators of what we're seeing. And we also are going to select just one property to give us an example of the trend of what we're seeing right now, something that's sold in the month of July. So we see a 2-speed market. We see that Ridgewood days on market is still averaging 16 days. Price change year to year, 29%. All right. And that's talking about the median sale price, 29%. roughly 9.5% above list price. And when we see month supply, we're seeing 1.1 month supply, and that inventory is very, very tight. So if you watch some of my other episodes, you'll see that I reference inventory numbers that are 4, 5, 6 reflect more of a balanced market where buyers have more opportunity, of course, because there's more homes to choose from. There's better leverage point to negotiate. That's not the case at all here, Ridgewood with a 1.1. So that 1.1 still indicates very, very low inventory. All right. So sellers definitely have a pretty strong advantage still in Ridgewood. But if you go to my Ridgewood episode, you'll see because of Graydon Park, because of the schools, train station, this is one of the premier suburbs in the state of New Jersey, right? So this is something that is not a surprise that in terms of where we're going to find soft spots in the market, where we're going to find our best buyer opportunity to have leverage, Ridgewood is not going to be one of those selections as we see with this data point here. But we see multiple speeds, if you will, in this market. Not every location is a Ridgewood. So when we look at looking at Paramus, we see like Ridgewood, 29% year to year, right? We also see that the average in terms of list price, sales price ratio is still above list price, but not quite as high. Ridgewood was at almost 9.5. We're talking Paramus, 3.5. With that said, your price points are still very, very much on the higher end, right? So we see median sale price is still over $1 million. Days on market, 24 days, not quite 30, and month supply at 2.8. 2.8 is getting closer to 3, so there's more inventory. All right, so Paramus in part is because it's geographically is larger than Ridgewood, but you're having more opportunity in Paramus. Is it a strong buyer's market right now? I still would say no. All right, so your soft spot is not going to be in these two markets, which both of them certainly creates a certain level of demand because of the reputation. Paramus is, and if you see that episode, you'll see that Paramus is in close proximity to train stations, but does not have a train station in the municipality itself. But because it's close to Oradell, it's right, Route 4 runs right through it, which has a bus depot that takes you into the city. I mean, I don't think that Paramus commuters are really complaining that much, but just note it's still a high demand market despite not having that train station. So Teaneck, if we're looking for, so Bergen shoppers, if you're Bergen County and you are looking for what's that softening, what's that open opportunity, that open spot, we look here and what we see year to year, and again, this is Bergen County still, so all of this is relative. Bergen County still very much is, I would say, probably your number one premium suburb, all right, for New Jersey because of proximity to New York City. Essex is right there as well, but Essex, when you talk about taxes, and yeah, that can be a factor also in people making their decision. But Bergen, in part because there's so much of Bergen County that wherever you land, you're going to land into an A district just about. There's a select few exceptions, all right? So once we get around a few towns, we're going to be in kind of like that B range and maybe a C here and there. But by and large, Bergen County is going to be a safe bet when it comes to schools. Teaneck is the soft spot. We see that the median sales price is still under 800, 787. Year to year is still very, very comfortable, 21%. And list price, sales price ratio at 4.5. Days on market, 46. And this is where there's a tell, if you will. And by tell, I mean something that is telling, giving us an indication of that market. 46 days on market gives us an indication that, there are some opportunities here because some properties have been on for a while. We see month supplies at 2.7. So like Paramus has a lot more inventory, but we're going to pull up a specific sale to see how this pans out. What does that look like? What does a bargain opportunity look like in a situation in Teaneck for this past summer. Let's dive into one of those now. So our Teaneck example we're going to pull from July is on 898 Columbus Drive. This is a 5-bedroom, 3.5 bath. It is a split level, and as we see as a general trend, many MLSs are going to either require or new owners, the buyers, prefer to have interior photos removed. So we're not going to have interior photos of this one, but you can see there is a 2-car attached garage. This one we see right here, 3% above list price, 38 days on market. So still for something that for the size, still under 1 million, which is above the median still for Teaneck, but it is not out of the ordinary in Teaneck at the same time. So we see that there is a very, very substantial size to the property, has partial brick exterior to that lower section. And this is something that went on market was on market for almost 40 days. All right. So 3% above. This is reflective of what is a softer landing spot. Even though that number may seem relatively high, even though it says, hey, 38 days, that's, it's not like it's 50 or 70, right? But this is what a softened position in Bergen County looks like right now. So if you're that buyer that says Bergen is that place, I need to find the best bargain. What we saw coming off of this summer, this is reflecting that for that kind of price point, and that location would have been Teaneck. Our next county, we are going back to Essex County, which we see a lot of features on. Our feature location being Montclair, which I often refer to as the Mecca of all of the New Jersey suburbs. But the Mecca is definitely experiencing a change right now. We have indications that Montclair is certainly plateauing. So we look at some data points here, and we see that even though we're still 22% very comfortable above list price where a lot of offers come in, price change year to year is at 0.1%, just basically flat. So think about that when we're talking about Ridgewood, we talk about Paramus, we even reference Teaneck also, albeit more budget friendly, but we are seeing that there is a flat line year to year in Montclair. Month supply still low, days on market still at 18. All right, so we see that there is still competition to get in. But when I'm looking at the data points here as well, when we're looking at what numbers the specific data looks like with sales. So looking at the data point from our New Jersey Association of Realtors chart, we see that there is a slight reduction in sales, closed units in the month of July year to year. And inventory is also down from year to year, right? So there is a bit of a mixed bag. So with low inventory and really not much available, to buyers who are shopping there, you think that would drive prices really high. But we are seeing that your overall price points, that surge that we've seen in Montclair is just not there right now. So as a luxury shopper, if you're looking to buy in Montclair, now certainly seems to be the time. Opportunities also present themselves in 2 other markets that are higher demand because of, we're talking about the big 3. All right. So Soma, which is South Orange, and Maplewood, 2 different municipalities, but they're often put together because they are 2 municipalities share the same school district. Okay. So this is where, again, we are seeing numbers that show a different type of marketplace right now. Again, something that we have not seen in a long time. So let's take a look at, let's start with South Orange. South Orange, we see that year to year, price is down 2.5%. All right. Volume of sales down 58% month to month. So we have to take that as a snapshot, not a full year's story. Month supply at 1.5. So inventory is still tight, and list price, sales price average, again, month to month from year to year, July 24 to 25, 12.5 above. Okay. So that is definitely something to pay attention to because South Orange specifically, oftentimes is in when we see these really strong surging markets. What we have seen is in the 20%, right? In terms of above list price. So year to year is down. Median sale price still under $1 million at 974. Let's take a look at Maplewood. That same median is at 860. Year to year down 3.5%. All right. So that, again, that doesn't mean that prices are dropping and lowering, but because list prices also are growing higher. So a property priced at 800 in 2024 could easily be priced at 835 in 2025, or maybe 850 in 2025. All right. Even I'm being conservative with those because someone can just factor, oh, well, you know what? We're a 20% market. So if I'm 824, I need to be at least 10%, let's say, right? List price wise, at least 10% at 880. Okay. So prices are going up still, but they're not hitting that mark now, right? So we're not seeing a price in 2024, 800 now selling under 800. So don't get that confused, but we are seeing prices that are being asked, they're not reaching that point in both Maplewood and South Orange from year to year. List price sales price ratio, 11, again, just under 12%, 18 days on market. So things are still moving. Inventory is still low. Homes are still being sold, but we see that there is stress on these markets right now. There is opportunity in these markets right now. If you are that buyer that is comfortably in that 800, I'd say 800 up to, South Orange can easily go up to 2 million, 2 million plus. But if you are entry level in these communities and you're shopping somewhere in that 750 to $1 million range, this is certainly an opportunity where we see in the fall. All right. So fall, we're going to get into that towards the end. What do we expect to see in the fall? Can we expect any changes coming up in the fall? We're going to cover that towards the end, but now is the time to, at the very least, explore. Another market where we're seeing that it is somewhat at a plateau is Bloomfield. So Bloomfield is another, what I often present as a bellwether type of market. It gives us a pretty good indication of what's happening in the market. For one, because it's more of that middle, right? That middle tier of people who are buying in the 5, 6, and 700s. Many of them are buying in locations like Bloomfield. Doesn't have the elite level school ratings, but solid. Certainly has trains, certainly has proximity to New York City. So for Bloomfield, we see median price at 650. We see year to year 1.6. So we're seeing a plateau. Bloomfield is really leveling out. Above list price is about 12%, 12.5%, 35 days on market, and 2.2 homes on market in terms of like month supply, right? So we are seeing that a little bit more supply, definitely a plateauing. Certainly that presents opportunity, right? So this is another market that had significant surges during the COVID timeframe. So where do we see still a red hot market in Essex County? And we have one, and this is another one of our bellwethers that's holding up to form in terms of being one of the significant rate producers when it comes to number of homes being sold and how competitive the bidding process is. That location being West Orange. So West Orange, we see median sale price at $742,500 year to year. So this is a standout with these other locations that we've just looked at. 21% in West Orange year to year. 21%. Above list price, 8.2, so not as high above list price on average. All right. 29 days on market. Things are moving within a month. And 2.2, like Bloomfield, 2.2. Now, the differences between the two, West Orange is a further west than Bloomfield, so it's not as fast of a drive into the city. West Orange does not have the train. All right, so West Orange, there's free jitney service to get you to a train in either Orange or South Orange, or or Montclair, depending on what part of the town you're in. And we have school ratings certainly that are higher for West Orange than Bloomfield. So this is a little bit of a mixed bag for Essex County, but what we're seeing in Essex County, which is certainly one of the draws in terms of people looking for suburbs in New Jersey, we are seeing signs of distress. We're seeing plateauing. We're seeing opportunity, but we see that exception right now being West Orange. So we're going to continue to select one property that will give us somewhat of an indication of, or an example of what the market is looking like in these counties that we're assessing today. 457 Academy Street in South Orange. This is one of Coldwell Banker's own, Victoria, who is our broker at the Summit office. This property listed at $850, 4-bedroom, 3 baths. And this is a property that's sold at list price, 15 days at list price. Okay. And this is giving us an example of something that reflects those data points that we see. We also know that there's some properties that still go well above, right? So it's still no surprise when we see a 20% above, but we're talking averages and year-to-year averages more specifically. So there is a cooling off and a plateauing that we're seeing because a property like this at 850 could easily stretch in some of our more hyperly aggressive markets up towards 900, if not a low 900. So we will see what happens as we get further into the fall, which again, stick around. We're going to jump into that projection of what we are going to look for and anticipate coming into the fall season. Before we jump on to the next county, I want to offer a quick resource to buyers who are watching right now. Hopefully you're getting some really good insight here, but I have a QR code. If you are in the buying process, you need some insights or maybe some assistance, or just like to bounce a few questions off of me, feel free. This QR code is for that purpose. The other QR code that we're going to post up is for those who are relocating here to New Jersey, either from outside of the region or outside of the country, and you just wanted to get some more insights about the Garden State. For homeowners, I have 2 resources for you. I have one that provides a free complimentary CMA, no strings attached, just know your value, which you should. It's the most, in many people's cases, the most significant investment that you have is the ownership of your home. You should know the value, get an update annually. And for those who I call cash curious, you own a home and maybe you're not ready to sell, but you like to know what an investor would offer for your home today in cash with a 2-3 week closing, if that was something that you were preferring or just, again, interested in knowing. So use this QR code. We'll get that number to you within 48 hours after receipt. So we saw a bit of a mixed bag in Essex County, and that trend is going to continue for Union. So jumping into Union, we took 3 samples. Union Township, of course, is going to be one of those. If you watch me enough, you know I hit on Union a lot because that is a market that stays very active. It's another bellwether market because it has large numbers, large volume, and pretty consistent demand, right? So, but we're going to start with Summit because Summit is the market that is defying gravity when we're talking about demand and performance year over year. All right. So we look at this chart, we see Summit median price is just above 1.5 million. Year to year is at 10% above that price from last year. Your list price sale price ratio is falling just under 15%, so 14 and change. Days on market 12, average days on market 12, and sales volume change. Sales have picked up this year 76%, right? 76%. Month supply at 1.7. So Summit is a market where a lot of buyers are asking about, like the fact that that train gets you directly into the city with no transfers. Great downtown, excellent schools. It has it in a significant way checks off on all 3. So for those purposes, very much similar to a Montclair and for Ridgewood. It's just the price that you're going to pay is going to be at a premium. There's limited supply. The demand is consistent. All right. So This is the gravity to fire right here is Summit. So you're looking for bargains. That's not going to be that location. But if there's a location that you absolutely have your sights set on, it's something that you have to be ready to compete. All right. Westfield is where we are seeing some opportunity. All right. So I'm going to put on the positive spin in that regard. So for Westfield, you see that there's definitely some signs of distress in terms of the year to year. There's a pullback, 6.3%. This is not like super marginal, like 1, 2, or 3%. 6% reduction of where sales, the median sales price. Doesn't mean that list prices again are dropping, but that median price is dropping for where homes have sold. Year to year, your list price sales price ratio is at 8.7. That ticked up just a little bit, 1% from the previous year, but our inventory is down. Inventory of homes for sale, 28 compared to 39 year before, 28% reduction. Month supply, 26% reduction there as well. And days on market, things have moved a lot faster, right? So a little bit of a mixed bag there, but there's definitely opportunity in Westfield. So if you're that same shopper, if you're in that, let's say you're in that 800 to 1.2 kind of range, Westfield is a place that you absolutely can negotiate. And now our main bellwether is Union. Let's take a look at Union. So Union, we're talking median sales, 587. Again, it's that middle of the road. It is a comfortable price point for buyers who are anywhere from that high 400 into the 600s. There's plenty of opportunity for you in Union. All right, so for Union, we see that median is 587. We see year to date price change year to date 6.2. So it's still ticking upwards, but not dramatically. Your average above list price is about 5.6%. 25 days on market, 2.4 month supply, and inventory is actually increasing. There's a building of inventory, and what that means is that there's going to be more opportunity, right? There's going to be more opportunity for those buyers in Union. So Union is not showing signs of a retraction or a pullback. Plateauing, I won't say plateauing, decelerating, I'd say perhaps. All right, so there is room. I like to see how these numbers translate, particularly with these inventory numbers starting to tick up. So there's some opportunity still in Union, which is at a more bargain price as well. So for Union County, we're going to take a look at a sale in Westfield, and again, indicating some of that softening of the market. This one is one of my own, not on the listing side, but I represented the buyers in this transaction. This is 720 Embry Crescent, sold at $815. Now, this was 9% below asking price, right? So this was certainly a fixer-upper. It's definitely something that needed a lot of upgrade and enhancements. So just give a little context here that is not like if this was one of those turnkey move-in ready scenarios and it just went that low. All right. But it was certainly in need of some upgrade. Okay. So this is something that was 15 days on market before going under contract and eventually sold at 9% below. All right. So this is given just a snapshot as to what potential there is. Not every transaction is going to look like that for sure. Make no mistake. There's still plenty of options that are going, or plenty of sales that went above list price, because we know what the averages are. These homes are, for every market we're looking at, they're still averaging above list price, but there's opportunities there, more of what we're seeing in the past. That's the key here, and this is reflecting that. Again, 5 bedrooms, 2 baths. You don't see it here, but there's a detached 1-car garage. Very deep backyard, very not very wide, but very deep. So overall, a very sizable lot, and 3 levels to this, including finished basement. So this is giving you a little bit of that sample of what a bargain looks like in the Westfield market. Our final county is Middlesex, and it is absolutely showing us the most significant signs of correction. This county is not the first choice of those who are trying to be closest to New York City, because that certainly will be Hudson, Bergen, Essex, and Union. Middlesex, however, is directly west of Staten Island for many commuters who are getting into downtown Brooklyn, into Staten Island, of course, or into lower Manhattan, are considering Middlesex as an option. And Middlesex is attractive as well because of taxes. The taxes are significantly lower than a county like Essex County, right? So you get tremendous savings by just considering a little bit further out of a commute. So looking at some of these, where opportunities lie, and we're going to start right on the opportunity end, and that being Piscataway Township. Piscataway, I've done a feature there. Piscataway schools are really, really solid performing schools. They've been on that A- to B+ kind of range, but very, very solid reputation. No train station in Piscataway, but Piscataway is neighboring to two townships that do have train stations, Edison being to the east and Dunellen being to the west. So there is some proximity. Of course, there's New Brunswick as well, but which is neighboring, which is really not going to be that much of an option for most people in Piscataway. Because of schools, because of being a little bit further out from the city, not many people who are commuters into New York City are looking at Piscataway. But if you're someone who just needs to be in that more central Jersey kind of location, Piscataway presents opportunity. It presents opportunity in that you're afforded a lot of different neighborhood kind of options. You can be in a very secluded, quieter area. You can be in a more central residential kind of area. You're close to shopping. You're close to freeways. You're really at an advantage if you have flexibility and not having to go very far commute-wise in Piscataway, because it presents a lot of really good, affordable options for you. Where we've seen some interesting correction is Edison. So we look at these Edison numbers, and in general, keep an eye on month supply everywhere that we look here, and notice how different that month supply looks from Essex and Bergen. All right, so Piscataway was at 2.9. We look at Edison, 3.3, and we see volume is down in Edison. We see the July year to year also down 12% in Edison. Median sales price, $711,000. Typically, they're still selling above list price, only at 3.7. So there's definitely a wait and see what's going on in Edison. Is this reflecting something that is definitely not just plateauing, but having a real retraction? All right. And there's a lot of different neighborhoods in Edison also. So North Edison being the highest demand is not going to look the same as other areas of Edison that are in some cases in bit industrial areas, or areas that are a lot further south towards New Brunswick. So yes, this is very interesting to see, because Edison, nonetheless, because of schools and because of train and because of just general accessibility to all the main highways, very attractive location. Now, Woodbridge, similar to Edison, very central in terms of commute options. We see a median sale price of $562, and Woodbridge is a story unto itself in that it breaks down into 10 different townships. The ones that you hear most often are Fords, Colonia. All right, these are ones that you hear that are pretty significant because a lot of people are looking in those areas, or there's a lot of historic significance to those areas. Iselin is another one because of the train station. All right, so Metro Park is right there in Iselin. And that is a 37-minute commute, right? Express train, 37-minute into the city. So year to year, 2.3. This is really somewhat of a plateau. This is sales volume growth. So the volume picked up a little, 6%. Days on market, a little over a month. Month supply, 2.4. So really balanced there. Not in full plateau mode. Still see some growing, but there's still opportunity there. Have someone actually right now that's looking to potentially put their house on the market block from one of the train stations. So we're interested in seeing how that's going to look given the current market conditions. And finally, South Brunswick. South Brunswick is one of those locations that draws a lot of attention because of school performance, and not proximity towards New York City necessarily, but is more so Princeton. It's nearby Princeton, not far from Princeton. Median sale price you can see is 900. July price is actually up 12.5% year to year. And above list price is at 3.4. We see days on market, 35 days. People are definitely taking their time. Month supply is at 3.3, and inventory is up 38%. So even though we don't see these red numbers showing there's drops and there's declines, there are indications that there is more opportunity for buyers in that market. And because South Brunswick is definitely for Middlesex is at the southern end of Middlesex, it's doesn't have those train options the way you would if you were, further north like a Woodbridge. And you're not going to have as many city commuters that are looking for that location, albeit again, it's high demand because school performances are very, very high for that community. So this is still presenting an opportunity for buyers who are in that 800 all the way up to say 1.1, 1.2 range, looking for more solidly central Jersey, tax friendly. Don't have to worry about a commute to the city necessarily. South Brunswick would certainly be a friendly option there. So Middlesex, all four counties that we discussed today, Middlesex is absolutely the county to consider for the best options with price and with negotiation. The other counties, it depends on location, but there are spots that are softening, that are becoming more of a buyer-friendly market. We're not buyer's market by any means yet, but we are certainly more buyer-friendly than we have seen since the pandemic. For our Middlesex sample that we're going to look at is going to be in Edison. This is at 174 Winthrop Road. We can see in this one, we actually do have some photos here to take a look at. This is a 3-bed, 2-bath ranch, and this neighborhood, I can tell you now, I've sold property there and shown many there. It's pretty much everything's on a slab. All right. So this is not a basement kind of situation. So we see 5% below, 66 days on market. All right. 586, 6% below. So this was certainly something that was priced over 600. And based on the photos here, I'm just going to scroll through a few of them. And we see that carport probably was a carport or a garage at some point right here that was then converted to living space. We see hardwood floors here. Very similar layout to a property I've sold there before. Yep. I want to say exact same layout. All right. So yes, this turnkey. All right. Turnkey. They have a little projector screen in there, 2 bathrooms in there, laundry in the back. Hardwood floors throughout, patio and backyard. So yes, so this is the 8817 zip code. So this is not North Edison. North Edison, entirely different kind of marketplace. But just note that this is a reflection of what we see number-wise for that market. So in summarizing, as we close out, we are going to be looking definitively as to what's going to happen in the fall. We're in early September right now at time of recording. By the time we're into mid and late September is when we see the next most significant surge of inventory that comes to the market for the fall season. That fall activity picks up from September once schools have started. Everyone has settled in from their summer routine, and those who are looking to buy are back at it again, or those looking to sell are looking to move forward and put their homes on the market. That activity is pretty significant between that mid-September all the way up to mid-November point. And then we see a little bit of a quiet down period in the holiday season, as you would expect. So what we're looking to see is exactly how inventory looks and how quickly we see properties moving and at what price above list price. So in our coming episodes, in our coming weeks, we're going to look more at specifically individual markets. These larger market samples, I have to normally go back 2 months like I'm doing right now to get a bigger, broader snapshot. But in the coming weeks, we're going to look more specifically at some locations, and we're going to really be able to identify specifically for that location what has happened over the past maybe 5 weeks, 30 days roughly. We're also looking to hear what the Fed says in terms of rate drops. We're expecting one. Mortgages has already adjusted with the expectation that there's going to be probably a 1/4 point, but we will see what develops with that as well. but that certainly impacts more significantly the mindset of buyers. All right, I see rates are dropping. That makes me more comfortable. I see mortgages are ticking down, but to hear rate drop definitely registers with a lot of buyers to kick into that mode of, all right, you know what? I think we're trending in a direction where I feel comfortable buying at this point. So I want to thank everyone for watching again. Please do click like, subscribe, notification bell. This helps us get the word out about New Jersey living, about my services, about New Jersey as a whole as it pertains to the real estate market. So I want to say that we are really in interesting times here in New Jersey because we definitely see a shift. I've been waiting to see when this shift was going to happen, and it's definitely underway. We just have to see how far it goes and over how long of a span of time. So I want to thank everyone again for tuning in. And as I always say, stay safe and stay tuned to New Jersey Living.